Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central. We talk about strategies, tips, techniques, success stories, but mainly we're here to support each of you. As we had announced on Monday of this week, we are going to start going through a very detailed process as shown on the screen, which is a 125-step checklist for launching a new business. This is, as you can see, if you notice the page number, this is about a 100-page process. What we're going to accomplish today is quite simply an introduction. And then each day when we get back together, we're going to start working through and discussing together, interactive, each of these. So today we won't go into detail of any of these. We're just going to simply go through, frankly, what the 125 steps are. And then starting tomorrow and on each day going forward, we'll just continue the process to dig in. Why is this relevant? Well, we've been asked a number of times, what is the complete process from beginning to end? And the truth is that not all small businesses will complete every step. Some will complete some steps, some are already midway through. But from an academic perspective, these are the 125 steps. It may very well be that you disagree with some of the steps or even the order of some of them. I'm much more the messenger than the architect of this checklist. But again, it's not just merely a checklist. As you can see, we've got 116 pages. We're going to literally, in the future sessions, dig into each of these. But today, let's start with the high-level 125-step checklist. Is this something that you should go out and tell a small business, hey, if you're going to start a business, you have to do these 125 steps? No, but it is a good resource to at least be aware of some of the steps that we frequently see many small businesses are omitting or even just not knowledgeable of. So let's dig in. We believe that step one in launching a new business is securing funding. Now, we'll be able to secure more funding after we have more information, more of the business is vetted through, but we want to, as quickly as possible, get adequate funding so the business has its resources to set up its infrastructure. And so step one is rather self-explanatory. Go to fundingproposal.online, get some funding offers. And we've talked about this. The typical client will get 4 to 7 funding offers. It's rarely more than 100,000. Often it's 20 to 30,000, but at least it gives them some operating capital. After that, we need to begin formulating the business model. Now, again, what we're doing today is not having detailed discussion of each of these steps. We're going to be doing that in subsequent sessions. Today, the goal is to simply go through the checklist. So number 2 is to formulate the business model. Number 3 is to determine the long-range goal. Number 4 is to draft the first vision statement. Number 5, we have a personal assessment that we would recommend that entrepreneurs complete. Step 6 is considering risk tolerance. And just a little side conversation there. What you and I know is that most small businesses fail, right? In some cases, you'll see that up to 90%, 9 out of 10 small businesses don't succeed. Now, granted, you and I can help them minimize that risk by getting them proper capitalization, but there is risk in starting a business. Now, different businesses have different levels of risk. One of the last clients that I worked with before I left the SBA was a gentleman, and we helped him get, I helped him get $1.2 million to start a franchise-based restaurant. And just to be candid, it was a Gaddy's, G-A-T-T-I', Gaddy's Pizza. Gaddy's Pizza, if you haven't been there, has pizza, buffets, arcade, and it was very resource intensive. And so we got him the 1.2 million and he opened the business, but he was not able to make it through the pandemic. Because what happened during the COVID pandemic, right? Well, people didn't want to gather. Buffets had to close. people didn't play video games in public. And so there is risk with starting and owning a business. However, there's lots of businesses that don't require $1.2 million to get started either. So of course, there's a scale or a sphere of risk based upon the type of business. Number 7 is to budget for pre-development and incubation, because here we're talking about from starting from scratch. So the business has not started. So that's one of the reasons we want to start with getting some funding right away, is because there are costs with setting up a business properly. And you and I have seen it. Some people will be stone cold broke and they'll try to start a business that's resource intensive. Well, there's an inconsistency there. So we might need to revise our business model based upon our short-term access to capital, or be really creative in where the capital is going to come from, because there are costs. I mean, and we don't sell websites, but you need to have a website to look credible for most lenders. Well, unless you're going to do everything yourself, there's going to be a cost to get the business set up properly. And that's what we're talking about in number 7. Number 8 is to establish financial resources and set a limit of how much we're willing to borrow. Number 9 is separating personal funds from business. Number 10 is get started with a business plan with an outline. And what you and I know is that's part of module 1 of our 4-module process, is getting that business plan together. Now, some of these other elements fit into it, but number 10 is starting the business plan, and we provide the business plan at no cost to participants with the grant we received. Number 11 is interesting, design and order business cards, because what you notice, well, we're only on step 11 out of 125, and we certainly have not yet put together an address. The committee that put this together was of the mindset that we need to have some introductory business cards to start to establish our positioning, even though we don't have our permanent address and so forth. So that explains the timing of that. Number 12 is to begin doing market research and analysis. 13 is researching the target market specifically, even more specifically researching direct competitors, and then move on to what indirect competitors are. And we'll talk about the difference between direct and indirect in future sessions as we go through. Number 16 is now we need to start building the financial model. And I think, we do that during the 4-week curriculum in module 1. Not only are we building the business plan, but we're also building a 36-month financial projection. Different people have different opinions of what financial projection should be developed. Is 12 months enough? Forward-looking 24 or 36. We typically will plan to build a 36-month projection out. But just so you know, not everyone agrees that you need to go that far out. Sometimes 12 or 24 you'll see referenced. We need to certainly figure out our break-even model. What's the minimum number of sales that we need to be able to break even, to stay alive, to not continue to burn cash. Want to begin initiating interviews with free resources that are available. I told you I used to work for the SBA through the SBDC. That is free. Our grant subsidized 4-week funding program is free. SCORE has mentors that are free. So there are some free resources. We want to make sure that clients take advantage of those. And then in some cases, we need to consider paying consultants, depending upon the business model. We have a client that's in the process of developing a rather sophisticated multi-level marketing model based around nutraceuticals. And so with that, that is such a specific and regulated industry, he'll need to have some paid consultants as well. So that as we go through these steps, just keep in mind there are some steps that may not be applicable to all businesses. Set the stage for development goals is 20. Start seeking strategic partners, 21. Number 22 is really interesting, making a list of assumptions. When I work for the SBDC, I can tell you that one of my coworkers was a bank examiner. And as a bank examiner, he was involved with reviewing loan approvals and loan denials. And certainly key to that was understanding the assumptions stated in the business plans of the applicants. And in fact, that's one of the first things that they would look at. Due diligence on those assumptions, because we're making certain assumptions of what's going to happen in the future for our financial projections to be relevant. And so that's number 23. We need to get a temporary address, and a lot of folks will use our cheap commercial address, which is fine, but we need to get an address here pretty soon, because without at least a temporary address, then we don't have a way to receive mail on behalf of the business. We're always wanting to keep personal and business separate, of course. Identify trade associations. I think this is often overlooked. Being a member of one or more trade associations related to the industry that you're in builds a lot of credibility. Lenders give that a lot of weight, because it shows you're actually involved with the industry. But we'll talk more about that in future sessions. And so once we've researched them, join the ones that we have selected to work with. Conduct industry research. A lot of times the industry research can come from these associations, so that's why the order is such. If there are any consultants that we need to hire, get those on contract, under contract. We need to make sure that we've identified all revenue sources. And again, that builds into the financial projections and live plan that we do in lesson 1. We need to be able to describe those revenue sources in detail. And then still within module 1, we need to go ahead and identify what the costs are, because there's very few businesses that have no cost, and there's very few services or products that we can offer that don't have a cost. And so we have direct costs that are directly associated with providing that service or product. We need to make sure that we know our cost structure. And again, that is built in to Life Plan for Module 1. We also need to list final non-reoccurring capital expenses, so cost of getting it started. And we talked about that in Module 1 under the resource plan. 33 is list each reoccurring expense for overheads, so whether it be salaries or insurance or so forth. We need to get a timeline built for the startup. 35 is we need to choose a business name and reserve it, and that's typically done through the Secretary of State. A lot of startups will use, again, our cheap business address, and so we can help them get this set up through SOS, it's called Secretary of State Online. We need to get our online presence reserved, and that's accomplished by reserving the website or the domain name. And then we need to order our DBA filings, and that's typically through the local county. We need to get our email addresses set up, and that only can happen once we have our online domain name. So specifically, we don't want to be using Yahoo or Gmail or American Online. We want to have a branded URL, domain name, and then our emails are built off of that. So now here we're going to go update our business cards. So when we talk about are there costs to properly set up a business? Well, yeah, we're already to our second set of business cards. Now maybe we're getting them from Vistaprint or wherever, very affordably. But you can see that setting up a business properly and diligently is quite involving, and that's why it's important for us to look at the suitability of the individual for the task ahead, as we talked about earlier. Make sure we understand the legal aspects about doing business. It is advisable to have a business lawyer that is there to assist you. We talk about this in the 27 mistake video, that you don't want to be a lone ranger. You don't want to go it alone, and you're going to actually need a number of different advisors to help you succeed, and having a business lawyer is one. But there's some legal programs, and I know some of you represent Legal Shield, used to be called Prepaid Legal, and that's a very affordable option as well. If you're going to use a registered agent, interview and appoint one. Then we need to hold a formal company founders meeting. So again, those of you that just joined us, we're going through today an overview of the 125 step checklist. And then in subsequent sessions, subsequent mornings, we're going to start digging into each of these and talking about them, answering questions, and it'll be a real interactive discussion. But today's goal is to simply go through the 125 steps so you can see the bigger picture. Starting tomorrow on the 19th, we'll start going through these in order. Okay, so now we're on 43. We're on only 43 of 125 steps. Again, takes a lot to properly set up a business, doesn't it? We're going to need to choose the business entity and file it. Should we file an LLC? We would normally advise against it. LLCs are typically a mistake, but some people prefer that. We're going to do LLC, C Corp, S Corp, 501c3 nonprofit. How are we going to set it up? Some of our distribution partners are big into setting up trusts to avoid taxation. So there's thought and strategy into the type of entity. Need to assign officers and directors, 44. Complete the internal documents, 45. We're going to need an accountant, and it's just like the attorney. We shouldn't go it alone. We need a team. Some of you might be saying, wow, this is looking kind of complicated and kind of expensive. Well, this is a textbook process of how to properly set up a business. We do understand that some clients won't have the resources or acumen to go through the full 125 steps. And so we can simplify it. But our goal today and going forward as we work through this list is to understand from an academic, from a high level, from a strategic perspective, all the steps one should go through. But we realize in practice, many people won't go out and hire an accountant right away. That's okay. We need to start bookkeeping records, just like we teach about in Module 1 in the 27 mistakes. We need to treat our business like a business. We talk about more in Module 3. We recommend QuickBooks. We don't have any financial interest in QuickBooks, but we need to track our revenue and expenses and use software that's designed to be able to produce the financial reports that lenders would expect to see, like a balance sheet. And so often I'll get clients that they don't know what you and I know, and they'll push back and they'll say, well, my business is a startup. I don't need that. Well, you're ignorant, right? You definitely need to be able to produce financial reports, even if your business was formed yesterday, because that's what lenders are going to expect. And if you don't have the infrastructure to track money, why in the world do you think that lender wants to send you 100 or 500,000 or $1 million or more when you don't even look like you're able to operate a business and track the money? We need to look good on paper, right? We need the business to look good on paper. We need to choose the tax year and accounting method. And we've talked some about cash accounting versus accrual accounting. We need to get our federal tax identification number. Sometimes it's called a TIN, T-I-N, or E-I-N, and that's free. And of course, we can help them with that. That's step 49. Depending upon the state, you may need a state employer identification number. We want to go start interviewing business bankers and select ones. In other words, we choose the bank that we're going to work with based upon us interviewing the different bankers to see who we feel is the best complement to our business, and that's the best fit. So based upon those interviews, then we open a business bank account. We need to apply for a business credit card. And I gave you the example. So when we decided to buy our first commercial building, sitting in now, we formed a new entity specifically to buy that property. We bought the property with no personal guarantee, 100% financing. And then we immediately opened a business credit card, and it's just $10,000. But having a business credit card, number 53, is important because, again, we want to separate personal from business. And then, of course, it doesn't report on your personal credit. By now, we need to have our first draft of our business plan completed. Define the exit strategy. What is the end goal? What are we trying to get to? Need to make sure that we understand all the regulatory bodies at the local and national level, everywhere in between. Any licenses or permits we need, it's important to identify those and get those. And now we should be ready to go forward in getting additional capital. So we got our first tranche of financing all the way back here on step one. And so that provided us some funding to do these other activities. But now we're ready to go for the next round. And part of that is deciding, because the business plan now has been created. Now we can decide, do we want to go after debt, an equity-based capital raise, or a combination of the two? With that, and again, we'll do that in life plan, as I mentioned earlier, develop the cash flow forecast. The cash flow forecast is often going to be impacted by how much capital we have to grow. And so that's why the order is. And again, we normally will do 36 months. We talked about the difference in timing, a matter of an opinion, no less than 24. If you're looking to go into an incubator or a business coach to provide that type of level support, that's where it comes in. Figuring out your sales cycle, prototypes, putting together a specific customer list, start testing the markets, track the test market data. If needed, find an intellectual property lawyer that's different than your general business attorney we talked about earlier. File for any intellectual property protection if needed, patents, trademarks, so forth. Start working on your management and operations plan on 68. Create a PowerPoint about the company. And we're able to do that pretty easily through Live Plan, by the way, which is part of the process for no cost in step one. Interview the vendors or manufacturers, depending upon what you're doing, where are your resources going to come from that you're able to then alter and resell to your clients. So we need to figure out manufacturers and vendors. Define your ethics and community program. Now we're starting to look on step 72 about real estate. Are we going to lease? Are we going to buy? Typically, we would use a real estate agent in either case. I know that we started with a real estate agent and then looked at multiple buildings and then made an offer and then bought it. Decide where you want to operate. We know that location matters. Different states have different taxing tax levels. Some states like Texas have no corporate income tax, which obviously saves you a lot of money. And then beyond that, there are certain taxing authorities, like a lot of our clients that are using our cheap address choose that partially because of the Chapman Fund. The Chapman, CHAPMAN Fund, FUND, is not through bank financing, but it's through a taxing authority. So it's a lot easier to get because they want to foster the economic growth within the taxing district. So, and it only goes up to 250,000. So usually it's used in conjunction with other types of financing. But the point is where you're going to base your operations will vary on taxes and other considerations. Investigate zoning and entitlements, review all location options, contact utility companies, and then we need to choose our business headquarters. So depending upon your business, maybe you have multiple locations, maybe it's just one, it'll vary. We had that URL that we bought earlier, the domain name. Now we need to get the website put up, and maybe you're going to do it yourself, but if not, it's time to get the website developer on board. I didn't like when they put companies. I think it's interview insurance agents, because agents often are independent and will represent multiple companies, but you understand the intent to identify the different types of policies that you might need. If you're going to buy a building like we did, you have to have, well, frankly, even if you rent space, a lot of times you have to have a liability policy. If you have partners, you probably want buy, sell. If you're properly set up, you're going to want a key person policy. So your agent will work with you on that. That's not our role. Purchase all applicable insurance policies, register with appropriate agencies, get your utilities turned on, get your phone, media, and internet turned on. Formulate the marketing plan, 84. Make contact with potential vendors, 85, because earlier we identified, but we didn't start contacting them. Earlier we identified who the vendors might be. Now we're actually reaching out to them. 86 is get the logo built, branding concepts. 87, consider a PR campaign on 88. I know when we got started, we actually hired a PR firm out of New York City, and it wasn't that expensive. It was like $4,000 a month, but they would create press releases, get us into interviews, and become a subject matter expert. So again, I realize not all businesses will want to do this, but this is part of the comprehensive checklist. Get your advertising plan put together, finalize the logo and branding, join your local chamber of commerce, make contact with potential customers. If needed, architects and designers, and it could be if you're renting space, but there needs to be work done, or if you're buying space or building from scratch. Again, we know some of these steps won't apply to everyone's unique circumstances. Hire a team for building or improvements. In other words, the contractor that's going to put up walls or repaint or what have you. Apply for building permits, apply for a resale permit if applicable, get a surety bond if applicable. Get the space ready to move in. So when we bought this building, it wasn't ready to move in. We had a new heating and cooling system put in, but we negotiated that from the sellers. It didn't cost us anything, but it had to be put in. New flooring, new doors, so forth. So just depending upon where you're going, there may need to be improvement done before you move in. Install any fixtures, furniture, and equipment. Order and install signage. Call vendors to get your initial inventory. Stock the office. And so when we're in module 2, we're helping clients build out their business credit. So usually a lot of these purchases, or at least some of these purchases, are going to be under trade lines that we help them establish. So it's not money out of their pocket. It's using their business credits, and now it's creating reporting instances to Dun & Bradstreet, Experian Business, and so forth. You need to start the interview process for staff, depending upon if you're going to start with staff beyond yourself. Interview payroll companies. You've heard us say many times, pay yourself, even though you own the company, pay yourself a W-2 wage. That is going to make your business look more credible. It's going to increase your access to capital. And so we personally just use QuickBooks Payroll. It's simple and inexpensive, and obviously it dovetails into to QuickBooks itself. But whatever payroll company you want to use, you need to decide. Start implementing the marketing plan, get that website live, get your printing company in place, implement your social media plan, get that city license if needed. Probably going to want to receive accept credit cards from clients. Often that'll just come from your bank that you are working with, but maybe not. Maybe you're using a third party. Maybe you're using QuickBooks payment processing. Get your policies and procedures together. I know when we got started, I hired a chief operation officer. His name is Dan, and that was really almost his full-time job, is just putting together that policy and procedure manual, because as you hire employees, you need that structure in place. Then we start hiring, start training new staff members, have a pre-grand opening event, assess what you've learned so far, make any changes as necessary. And then essentially on 1/16, we're going live here. We're going to start selling actively to clients. Start a customer retention management. You don't want to always just be hunting for new clients. You want to have resale opportunities to existing clients. Look at local economic partnerships. And that's somewhat similar to the Chapman Fund I was talking about earlier, where you can access either free money or unique money through economic incentives. Implement operations and begin selling. Make your public announcements, like your PR announcement, which we'll talk more about in 124. Make sure we have our regulatory and compliance procedures put together. Join peer and networking groups. Hold a grand opening event. Submit the press releases. Reset goals. Evaluate and adjust. So, oh my goodness, that was a lot of information. So what we'll spend our next few sessions on our morning Zoom calls is drilling into each of these, discussing them, answering your questions, and having almost a roundtable dialogue. But I'd like to get your feedback as we close out today's training. What is your first impression of this checklist? So we've got 211 people on here, but Alfred, April, Bernard, Hannah, Joseph, our big hitter out of Arkansas, Lynette, Lon, Magnus, Pauline, Wayne, Winston, others. What's your feedback of this checklist? Our goal is to go through from an academic perspective so you're aware of all that should be considered. However, with that being said, it all should be considered when starting a new business. We know that not everyone will follow all of these steps. Not all the steps are applicable, but I commonly have been asked from A to Z, what does it take to set up a business? And this is the checklist, what we're going to go through. And again, we only covered 3 pages today. There's 113 pages of the details of this that we'll be spending time on. This was part of our college class when I taught the semester-long entrepreneurial class. We had a textbook, and this was part of it. So feedback, questions? Okay, so we will be back tomorrow morning and most mornings for our daily Zoom, and we're going to start digging through these steps one by one, not just superficially me reading it like we've done today, but instead we're going to actually dig into it, make sure that we understand the relevance. And it's okay. You might disagree with some of these steps. You might say, hey, I don't think the small business should separate their personal funds from the business. Well, great. I'm not saying you're wrong or we're right. This is what the committee created, and it's a guide. And if some of the steps you don't agree with, that's okay. For those of you that are white label partners, this is really important, because if you're a white label partner, you're doing the mentoring and taking clients through the process. And I'll tell you, a lot of our top producing white label partners, you know what they do? They create a whole new revenue stream because they become a paid consultant. Specifically, let me scroll down. They will become a business coach for the clients after they've received funding. Where was business coach on this list? It was somewhere here, right? I should remember which number it is. But the point I'm trying to make is that in addition to, here it is, number 60. So in addition to getting paid to help clients raise the capital, which is really the essence of what you and I do together as technical advisors, you shouldn't, in my opinion, be short-minded, especially if you're a white label partner. You could continue to be their coach, to be their resource thereafter, helping them set monthly SMART goals, specific, measurable, obtainable, realistic, and timely, and helping them accomplish those. And so a new client shouldn't just be $5, $10, $15, $20, $25,000 of money to you as a performance fee. They could actually be a long-term reoccurring revenue stream based upon you doing the coaching. Okay, Lynette asked, where do we get the entire list from? So this is the list. We've gone through the 125 at just a list level. And then starting tomorrow, on tomorrow morning's training, we're going to start digging into the details of each. So we'll be back tomorrow and start digging into each of these. Thank you each for your time. We'll see you tomorrow morning. Have a great day. Bye-bye.